only part of it. For these people and others who are thinking about crypto from the standpoint of an institutional mindset need, again, I'll say a Goldman or a JP Morgan or a Morgan Stanley or whomever, pick your established financial institution. Do they need an organization, a company like that, to offer a full suite of crypto services to get them comfortable?
I think that's coming. And so listen, we started Galaxy because I was like, let's help credentialize this space and let's get in front of that wave. As a pure crypto company, you have less at risk than Goldman Sachs or Jefferies or even the second tier players. And so we thought that's our competitive edge. I was originally saying we're going to build the Goldman Sachs of the space, and now I know this is going to get myself in trouble, but I was like, it's actually more like Drexel. If you think about what Mike Milken and his guys did, they helped credentialize junk bonds, high yield as an asset class. They were the proselytizers, the traders, the bankers, and that's what we're trying to do. I tell you, the rest of the guys are coming. Goldman Sachs has set up a trading desk, and they're starting to trade NDFs. They will trade the coins themselves as soon as they get a custody solution. I know lots of what I'll call second tier, they'd hate to be called second tier, so that's probably not the right word. Smaller investment banks are looking at raising money for crypto companies, and they're trying to get around, is it the right thing to do or not? But they're all having that conversation. And so for me, it's a race to actually get established, get in business, hire world-class guys, and be in that business.
There's a huge regulatory overhang. If I were an institution, I might ask myself, why would I want to get in front of the SEC or the DOJ right now?
It's a great question. Listen, I started by saying the first 3 years were 98% or 95% retail. Regulators don't come from retail. Their job is to protect retail, but regulators come from institutions, right? Jay Clayton worked at Sullivan & Cromwell. So they're talking to the guys they knew from the Goldman Sachs's, from the JP Morgan's, the mortgage desks. If they're regulating mortgages, they call their guy. And so they missed this completely because there was no one playing on it. And so all of a sudden, it's late last year, and this goes from small market cap to all of a sudden $1 trillion worth of market cap, and Paris Hilton out there pitching coins, and everybody in the planet talking about it. The regulators got worried. I mean, it was interesting. CNBC, not to pick on CNBC, but I think I can see them here. They literally had a show where they were one by one walking people through how to buy the Ripple, the XRP coin. Literally when it was trading at $3.20, having moved from 20 cents 8 weeks earlier. From the day of that show, the thing plummeted. We were short. It plummeted all the way back to 50 cents.
That was peak nonsense?
Peak nonsense. But the regulators had to get involved. And so they are getting involved, and they're doing what they're supposed to be doing. The first thing is, wait a minute, let's calm things down. Let's go after fraud. Let's go after market manipulation. So the first two things regulators are going for are fraud and market manipulation. And it's a good thing. The Department of Justice talked about market manipulation with these indexes inflating their volume numbers. It's all true.
So let's first talk about the Goldman Sachs entering the market. I think that this is what is going to allow crypto to really start to go to the moon, because institutions don't want to mess around with, as he was joking around, second tier, and they want to see the proper regulations, as they were bringing up here. And by the way, I'm so glad he ripped fast money. And if you've been following my channel, it is unfortunate that literally most of my videos are fast money, but it's you guys, the consumers, that are making me do it, because for whatever reason, a great interview like this on Bloomberg will get like 1/10 the views of what one of those stupid fast money shows will get. So I'm obviously forced to do that, or at least follow it for now until I can convince you guys to start clicking on these interviews instead of the fast money stuff. But he's totally right that they're waiting for the big boys to get in, and Goldman Sachs is, I mean, he mentioned it, within 3 to 6 months, Goldman Sachs, a lot of these tier one institutions will have their own crypto custodianship and trading desk, and that will really pump up the price of crypto. So if you haven't had a chance, please subscribe to the channel. Check out the links below on this video. You can either use Robinhood or Coinbase to invest in crypto. And if you are going to do this and you're a newbie, please go through my channel. I talk about very conservative investing tactics, so be careful. Start to learn about it before you YOLO and start putting in large amounts of capital. And I have plenty of content where I will go over pretty much all that stuff. But let me know what you guys think. But I do feel like Goldman Sachs entering this market, which will probably, the custodianship issue will probably be figured out within 3 to 6 months, is why Bitcoin will easily go to 20,000 and we'll see $1 trillion market cap. But let me know your thoughts, and I will talk to you guys soon.